Okay, students, thank you for your patience. And I think we have how many? Okay, we have 14 students, so we can start. Mm, Last week, the revision, just to go through a revision, we started with corporate reporting regulatory framework, and then we discussed the voluntary reporting mechanisms and voluntary reporting concepts, principles, practices, and also what type of models or tools that would be supporting to report or disclose on these voluntary reporting practices. Because when we say voluntary, it's nobody is having a clear idea what is to be reported. Say that you want to report on sustainability, but you don't know what is to be reported on sustainability. So you need a guide. So in the absence of these acts and rules and regulations or standards, so then different organizations, different professional accounting bodies, together with these regulatory bodies like IFAC and small, not small, international and independent non-profit organizations like GRI, and we have many more, like accountability in the sense that in that accountability word, A starts with the capital, and again in the middle A also starts with capital. That is also an institute, accountability. So that also issuing some standards, some guidelines or some assurance standards with, with some numbers. Say that we are using IFRS 15, 12, something like that, and they issue some guideline on this assurance aspect of voluntary reporting mechanisms. So GRI, this accountability, and United Nations UNGC principles and UN SDG goals are some models, or SDG is a concept again, but companies do use that as a guide for them to report on the sustainability aspect, right? So I think we discussed last week. Let me just to go through. Just a revision, just a summary, and we said this is important. And we said whatever the sustainability, it's not only the environment or the social, but number one is financial sustainability. And there are some things for you to consider in attaining, in reaching this financial sustainability, in maintaining environmental sustainability, and going for this social sustainability, right? This 3P model, 3E model, and we are not going to go into that detail. ESG framework and this, right? And I told you GRI is the highly used, recognized in terms of the number wise, also highly used, highly recognized, highly accepted, widely used mechanism in reporting these sustainability aspects for organizations, right? And then we just went through some of these, and we said from this January onwards, they have issued something called GRI standards and general, or this, company specific, company general information. They are having some general standards, and some sector specific standards are there, topic specific standards are there. And the thing is, you don't have to follow from, the number one to the end. No, you can pick whatever the standard with the number that you want to refer or disclose, and then you can adopt. And SDG goals. And in terms of some voluntary reporting aspects, right? So we said risk management was another area that later on, added or being taken into this discussion in terms of this reporting risk. So in risk management, the summary was we need to be first identifying what type of risks, internal, external, or a mix. And then we need to assess, we need to rate the risk because every risk is not affecting, influencing uh, us in the same level, with the same severity, with the same probability. No. So the severity is different. So then we need to assess, rate, and then we need to think of some mitigating or management strategies and go with the action plan and then connect with our stakeholder analysis and how that particular risk affect to the organization as well as to the stakeholder requirements. So likewise, you do some kind of an analysis or some use matrix. And then another concept was corporate governance. And we said we have few corporate governance codes available in Sri Lanka. Mm, just a moment. Let me just show you this. Before moving on to this today's lesson number 3, let me just show you. Uh, right. Students, this is, I think we discussed that there are two main corporate governance codes. It says, can you see this, the name? Code of Best Practice on Corporate Governance 2017. So that is issued by the Institute of Chartered Accountants of Sri Lanka. Okay. So that is the 2017. There was previous edition since 1997. Because students, first, how this corporate governance, impact came into the Sri Lankan context, Sri Lankan accounting practices was also because of an influence with this King's Code and King's governance, which were, dealing in this British system, right? King 3, King 2, and King's Code of Governance, you might have heard. And with this Sarbanes-Oxley Act, right? So due to these things, this governance came into our accountancy profession as a practice to be followed. And then later on, our National Accounting Standards Setter, then they have developed this code of best practices, since 1997. And by 2017, we are using this code, right? So can you remember we just discussed some areas, and these are the sections about the company, and under the company about the directors and the directors remuneration, how the relations with the shareholders, accountability and audit. And then section 2 starts with shareholders, E, institutional investors, other investors, interest on things, and cybersecurity, and H is ESG, right? So then one by one, they have explained what do you need to report. And let me share the other code. So this is again another code, Code of Best Practice on Corporate Governance, that is issued in 2013 by whom? By the Chartered Accountants of Sri Lanka and the SEC. Right? So their copyright goes, this is a joint code. Jointly, this has been issued by the SEC and CASL. So that also, they have also started this with 1997, and you have the choice to choose among these two. Again, but the company, remuneration, shareholders, accountability and audit, almost the same thing. And I told you there's another circular has been issued. Maybe the banking people, they know. Just for your reference that I am showing these materials. And like I told you earlier, not from these acts or these codes, I'm not going to ask you any sections to be written for your examination purposes. But you need to be understanding why these are there, why corporate governance is important, and at least you should be knowing what are the codes or the practices available in these concepts. This is Monetary Board, the Central Bank of Sri Lanka, and they have issued this circular. Banking people might be having an idea of this. So this is again, they are talking of a governance framework, and first of board's overall responsibilities. So if you are a bank and you need to abide by this framework as well, governance framework and composition of the board, and likewise it tells you one by one these things. Okay, right. And And let me also show you the SEC website on this corporate governance. So some of you all must have visited. This is Securities and Exchange Commission in Sri Lanka, and they are under the rules and regulation. They have a separate section for this corporate governance, and you can go through this one. But see here, they are talking of this joint code by SEC and CA Sri Lanka. Okay. And I also can remember that I told you to go through an annual report. I know that everybody must have seen an annual report, but I have taken this 21-22 DMOS annual report for you all, just to show you all how or what type of things that they are talking in this annual report. Okay. Right. So this is their content page. And they are talking of, first, can you remember the descriptions of the company and company profile and the industry, some economic, the economical industry or the industry that the company the performs, about the structure, about the people who manage the company. And that is, also relating to a particular standard in one moment. Sorry for that. And then they have another section for the management commentary. And we'll see today what is this management commentary. I told you they are this demo Sri Lanka, they are going by this concept called integrated reporting. So that is why they are using these terms like value creation model, capital report, right? So these things, these wordings will be very familiar for those who are in this integrated reporting process, right? So others maybe they must be using some other criteria. And about the governance, under the governance, corporate governance and stakeholder engagement, risk management, 84 and 104. That is what I wanted to show you. Okay. Corporate governance report. Just, like I have taken this as an example, company to company, these things might be different, and the way that they have taken or, disclosed these principles or concepts might be different. So this is about their corporate governance, and they have specifically named that aspect as a particular report, comes under the annual report, corporate governance report. And first they talk about this corporate governance framework. Governance framework is there, and some principles: integrity, accountability, transparency, and about the governance structure and what type of committees are being consisting and contributing to this governance, and then about this boards composition and board proceedings, the appointment, remuneration, and the number of meetings, so many things relating to this board. Everything they must be following a particular code. Okay. And okay, just see this students as to how they have used, this is their mandatory setup and this is their voluntary practices. So can you get some idea from this? In their governance framework, they are first telling, okay, under which compulsory setting that we are, standing and reporting, and also we are on a voluntary basis as well, and what are the guidelines or the codes or the things that we adopt in the voluntary setting and as well as in the mandatory. So can you remember our mandatory regulatory framework? We said Companies Act and Sri Lanka Accounting and Auditing Standards Act, and then these SEC regulations, because this is a listed company. So then all the listing rules together with the CAC are there, specifically mentioned in this SEC regulation, in this SEC Act, and listing rules, and articles of association. They are having the subsidiaries, associations, and everything. And voluntary adherence, in the voluntary setup, see, Code of Best Practice on Corporate Governance issued by CA Sri Lanka. So they are using this one. And also, they have not just limited themselves to this governance code, and they have said, in terms of this voluntary reporting, I told you that governance is a one area. But like so many other areas are there, like environmental, social, SDG, lot of things, sustainability, right? And then they have also adopted these 10 principles in the UNGC. I told you GRI is just a one indicator or a framework. And can you remember last week I told you 10 principles, or they earlier they had these 6 principles. I can't remember, earlier 10 or now 6, or now 6 and earlier 10, right? You have the choice to go with these UNGC principles. And Code of Business Ethics of DEMO and GRI Standard C, they are using this GRI governance code and also UNGC principles. And their own these environmental management systems, EMSs, if they apply, and the systems and about the system, everything they are. This is not mandatory. Nobody's asking you what is your EMS and who involved in implementing that and why did you want to do that. But they themselves have decided this is important in reporting. And then EMS, and about a health and safety management system. Right? We don't have a governance code or act or a rule to see whether you are under this health and safety management system. No, right? So that is their things, and this is their values: stewardship, transparency, integrity, and accountability. So in maintaining these things, they are saying, okay, we are on this mandatory setup as well as we are on this voluntary things as well. Okay. And where's their risk? Sorry, I forgot. Students, I hope you all are there. Let me close the unwanted files, otherwise it's number was 86. No? Right. Okay, so we were in this corporate governance and see the things that they have reported about the board. That was the place that we were. Remuneration policies, executive pay, how they have decided. Corporate governance report still continues. So they have given a QR code for this also, saying that they are with this corporate governance code of best practice on corporate governance. Students, I hope you will get something from this. That's why I, rather just continuing with the session, I want to show you how companies have adopted and what are the things available in the practice. Okay. I hope you follow me. And about this digital platform, because I don't know to what extent that you have heard of this digital governance, right? Or this IT governance, right? Information systems governance. So we are on a technological platform or a digital, world. So we are using systems and we are being maintained. We are being, managed by systems. So to what extent, when you are dealing, managing, or implementing these systems, technology, so then some governance things are there for you to practice. So we call it IT governance or digital governance, right? So they have touched on that area as well. And then report on the audit committee and other reports and everything. And they have come to this stakeholder engagement. I will come to this stakeholder engagement with the integrated reporting concept. And let me just show you this risk, because we have discussed risk and corporate governance as voluntary concepts. All right. So in risk, first they have given out the structure or the process and risk management structure, and what type of codings and things or systems that they have, right? And this is the matrix that I have been referring, right? They assess the impact, right, and also likelihood of occurrence as well. So then they call it the risk heat map, and then they see this, different colors denote different severity and different level of affection. And risk management, this is this table talks of key risk. First, they have identified the key risk, and they have assessed that risks impact on the strategy and value creation, and inherent risk, mitigation strategies, and residual risk, right? So they have, done an assessment like for this risk rating, prioritization, management, right? Okay. And let me show you the GRI things for a while before moving into the new discussion. Just give me a few seconds, students. Let me open the files, otherwise I get myself confused in opening, going to the other one. Let me first open the file. Okay. Now let me show you the GRI website. Okay, so Okay. So this is the GRI website, and you can get many information from this. And they say who they are and what they do about GRI, right? They are, uh, how they have, formed this and what they do, how you can contact in about GRI. And in standards, they have said you will be able to download the standards, because from 2023 here it's been updated on 2023, because earlier I got the saved web link. That is why it showed you 2022. And then you can download the standards and sector specific, topic specific, right? And they are now on this Global Sustainability Standards Board, right? Like the Sustainability Accounting Standards Board, SASB. Now, this SASB, IFAC, and several other accounting regulatory bodies, accounting, professional accounting bodies, so they get together and form something called GSSB, Global Sustainability Standards Board, right? So then you can read on that, and you can find many information here. Let me show you a report. This is just an example. Can you, I hope you can remember the general disclosures, right? This is GRI standard 102, general disclosures 2016. See, this is GRI, and to say that they are with GSSB, they are taking this logo as well. This is just an example for GRI 102, what is to be reported. I hope you can remember. Just connect. Let me connect you to the, otherwise you don't know what I'm talking, right? You must be sleepy now. This one. Can you remember the general standards, general disclosures, right? So strategy, profile, and material aspects, stakeholder engagement, report profile. So from this is the standard which we have taken there. Okay. So this is about the general disclosures. First one, organizational profile. Right? We just had this term, but under organizational profile, what things you should report. Okay. Just student, just go through this list. Give me a minute. Thank you for your time, students. When we say organizational profile, what things to be, you know, reported. Everything is, it's given. And then about the strategy, ethics, governance, stakeholder engagement, reporting practice, right? So this is just a standard for the general disclosures 102, right? Because let me always connect the slide with you, otherwise you will be wondering why I am showing this. See this one. This is the thing, content that I just showed you about general disclosures, GRI 102 for an example. Okay. And then let me show you consolidated set of GRI standards. They have consolidated every GRI standard, right? And with the number, you can go through the content, right? So they have issued this publication, GRI. Okay, so this is the GRI consolidated set of standards. Let me close this stuff. And now let me show you the GRI index. Students, I hope you all are not sleeping. Okay. And this is the GRI standard, oh sorry, the index, right? If you are new to this, they have, you know, in an Excel sheet, Excel template, they have given this, okay? And you can read the instructions and guidelines given, and the guidance is also there. And one by one, they have said what is to be reported. Say, for an example, general disclosures, organizational details, and you can show this is the index. You can take this as it is and put into your annual report as an appendix. Okay, so you can refer the page number here where this story, this section, it's being stated. And entities included in the organization sustainability reporting period. Can you remember we discussed this one last week, the reporting boundary, the reporting profile? So that includes who includes and what type of companies are there in this, you know, report. Is it a group company? Is it only about the parent company? Is it, you know, consisting with the subsidiaries or associates or everybody? And is it about a particular sector, right? So that needs to be disclosed, and the period needs to be disclosed, and the guidelines needs to be disclosed, and from whom that you have obtained the third party assurance needs to be disclosed. So likewise, that is, everything comes under reporting, reporting profile. Like you give a profile for the company, for the report aspect you need to give a profile, okay? And then all are, it's two, and then you start these material topics, right? Can you remember we had a section materiality aspects, right? So then it goes with this three aspect, and economic performance starts with GRI 20 number, and you can just follow, right? You may not get a perfect understanding, but you if you are interested, and as a practitioner, if you want to step into this, or else as a person or a researcher, if you're interested on this, right, you can read on these things. I will upload this, I think this 2023 one into the chat in a while, okay, for your reference. We'll do it now, otherwise I will forget. Okay, students, the GRI content index template, it's on your chat, okay? All right, now let me just show you about these SDG thing. About the history and 17 goals, SDG icons and everything you can get into your report, because Global Sustainable Development Report, Global Sustainable Development Report in 2019 and 2030. You can go through this one, and several other things are there, right? And let me also show you this UNGC 10 principles. Principle number 1 about the human rights, they are having 2 principles, and for the labor aspect, again 4 principles, environment aspect 3 principles, and this anti-corruption aspect 1 principle. So altogether they have 10 principles. You can totally forget about GRI and then adopt, these 10 principles, or else if I told you there is a reason for the company for this voluntary reporting. So together with this GRI index reporting, plus like the demo has done, you can show this UNGC, you are on this UNGC 10 principles platform as well. It's up to you. Right? Yes. Okay. Now from this Sri Lankan example, let me show you how demo has done this with the page number. Okay. So this is demo's annual report. level of compliance with mandatory regulations. They have shown this in their appendices. Disclosures required by the Colombo Stock Exchange, Companies Act, one by one they have given. And then comes this GRI content index. So GRI 101 and material topics they have selected. They have not gone by all these 200 standards. They have selected what is important for them. This is the GRI index. So what they have done is they have just shown the page number in where this item it's being located or positioned in their annual report. So this is their GRI index about water. If somebody wants to follow what they are doing relating to energy and what's their management approach relating to the energy, and then you can refer 100 to 103 pages. So that is about GRI. Okay, so I hope you have some understanding with these examples. Okay, so anything students to share or to clarify? Are you all sleeping, or you had anything from these illustrations? Students, so was this useful, or are you all there?
It was very useful. Got a good understanding of that. Yeah.
Thank you, Niraj. Okay, so just give me a few more seconds, students, before moving into today's one student has mentioned in the chat, Suchira, joined 23 semester 1 to complete.
Yeah, excuse me, madam.
Yes.
I've actually been there from the beginning, but I recently only I completed semester 2. So most of the time I had to attend the full semester 2. So I have missed here and there. So just trying to now consolidate my 3 subjects and trying to complete. So if someone can help me to get all the slides completed so far, that will be like, I mean, very helpful.
Okay, you mean related not only to this subject, no?
Yeah, I'll be just part of the group, but only in this forum. If I can get the MFE 8 slides, it will be helpful.
Yes. I think yes, Johan can help you, and we can ask Johan to add you to the group, and then whatever, because I also just share the slides through the WhatsApp group with him, and I also don't have the access to LMS, I think, for this local group. So let me check with the program for that. Then that is easy for me. But we have our Johan, so he will definitely add you and coordinate. Okay.
Yeah. Okay. Thank you. If Johan can add me, then thank you.
Few seconds, students. Okay, thank you. And now we are coming, because we know mandatory, and now we know voluntary, and now it's a mix, right? So it's I'm getting messages saying that my connection is poor. I know that my connection is poor, but we'll see to what extent we can cooperate. Raining, no, students, for your areas since morning and since days? How about today morning? Raining or not?
Still raining, yeah.
Yeah, raining, no? Okay. And if you can't hear me, and sometimes my voice will be a bit delayed due to this, bad reception. So please tolerate. And if you really can't grab the session, just send me a text or just disturb me and let me know. Okay. Students, so we know the mandatory, we know the voluntary. So then what happened was, we'll come to this. Let me show you, the slide number 4 first, just, for a glance, just have your attention here. And you also might be having the question, so we have so many things in this. So why again a new concept called integrated reporting? Will that also will be ending up with this, just an addition to the annual report as a section? Or sometimes, somebody might be, disclosing or releasing, publishing a standalone integrated report together with the annual report. So what is this? Is it a new voluntary reporting concept? Or why such a new model or a concept or a reporting practice, right? You must be having this question in your head by now, right? So at the end of the session, so you will be definitely able to, like, clear out all these clarifications and misunderstandings and questions, because this is not something to replace the things that we have already said, right? Instead, what has happened in simple terms, what has happened in this corporate reporting was, apart from this mandatory, when people wanted to report on certain voluntary scenarios, they were just plugged into the report rather integrating into the report. You got my point? These so many aspects were bolted on to the report rather taking the sense and integrating into the content. That is what happened. So that is why these limitations, drawbacks, challenges, and this extensive reporting, everything has happened. You must also have heard the word of this extended reporting, right? So in Australia and New Zealand, they don't usually use the term voluntary reporting, right? Extended reporting, I'm not very sure, I can't remember. They use this ERR, or sometimes they call it EER, extensive reporting. To avoid that, they use this extended reporting. All the voluntary integrated reporting and everything, they talk under that area, right? So what really has happened was, due to these small things, concepts, principles, because all throughout these years, everything has changed, right? Everything has changed in the reporting. So there are reasons for these corporate reporting practices to change. We'll discuss. We'll come to that question in a while. And then, so there, so many things evolved because due to the limitations being identified or being facing, challenges being facing by the existing practitioners. Right? So then new things popped up. But integrated reporting, not just a section or a model or a tool, this is a whole practice, which would, this doesn't say this is mandatory, this is voluntary. No, this is an integrated concept as the term says. Okay. So we'll go from this topic, integrated reporting and value creation. The importance here is why integrated reporting always talk on this value creation is, in traditional reporting, I am using the term traditional corporate reporting to denote the earlier practices, and integrated reporting to the current. Okay, so don't think that traditional corporate reporting is something else. No, the things that we discuss, traditional corporate reporting in the sense, these mandatory financial statements and sustainability, everything includes. Okay, so this traditional, because we have not said no to this traditional corporate reporting, but still most of us are on this traditional corporate reporting. Very few have has gone for this integrated reporting. So traditional corporate reporting practices are also there still in the practice, but due to the limitations, challenges, problems, and things in the traditional corporate reporting, we call it TCR, all right? Traditional corporate reporting, it's a type of a thing that has evolved in this corporate reporting phenomenon, all right? So integrated reporting, it says, okay, we are here to overcome or to give solutions, right, or to address to address in the best way to these limitations or to the challenges that you go through in this traditional corporate reporting. That challenges may be relating to, the voluntary reporting, mandatory reporting. We can't say no, right? This stuff, integrated reporting, has come into this accountancy profession into the world and said, okay, we are trying to solve or address these limitations in TCR, right? So, and one more thing, why this integrated reporting concept is such, so important. This is because traditional corporate reporting practices always talked, things on isolatedly. Can you remember the concept value added statement last week that we had a discussion around, right? So value added statement, like very few people, even in TCR, very few people knew that, okay, what is VAS, value added statement, or economic value addition? And only those who engage in this reporting know, right? But integrated reporting, they are highlighting a concept called value creation. First, they say you need to create value to yourself and then to the others, right? So the same thing, value added statement, but as a reporting mechanism, as a reporting style, they have changed the audience, attention and their focus and, their perception, right? And then always this reporting has been connected to the value creation. That was really missing in traditional corporate reporting. Reporting was taken care isolatedly. Reporting, okay, there's a reporting team and there's a head, CFO, okay, reporting done as an annual reporting practice. Okay, so because it's mandatory, say that you need to prepare. Okay, when the time comes, everybody is so so stressed, and then okay, this is month end and we need to get this into before this signing off and everything. So people are so busy when it comes to this periodical or annual thing, right? Then it has happened just as a a thing to follow in your annual calendar. Okay, annual report preparation, that's it. You just entered and you took your time, entered everything, but who actually reads it? You are doing it for your stakeholders, but who actually read it, right? So then so many problems were there. As a mandatory thing, as a requirement, you need to do, but then what is it, right? So reporting was just concerned or limited as an annual as an event in the annual calendar. But then with this integrated reporting, they came with a concept called integrated thinking, right? And we are not going to say this integrated thinking was not there in organizations before this integrated reporting came into the world. No, it was there. Otherwise, you can't do business. If you do not think integratedly, you can't be successful. No, but as a practice, this was in isolated things. Reporting was somewhere, and boardroom discussions, thinking was somewhere, and then value creation was somewhere, stakeholders was somewhere. Just stakeholder analysis was just limited to this annual calendar event, right? Then the boardroom doesn't know anything, right? Maybe the impact of, if you have, say for an example, if you have been able to save something on the environmental aspect, and then you are not going to take it into the boardroom discussions, and what is next? It has just limited to an indicator just being shown in your annual report, right? So then reporting was somewhere, value creation was somewhere, and thinking or boardroom discussion was somewhere, right? And this reporting and thinking was not connected. And through this integrated reporting, what they're highlighting is this reporting needs to be, this is a cyclical process. Reporting influences thinking, thinking influences reporting. So that is there, in simple. That is why I helped you in this way to grab the idea or to grab the real sense of this integrated reporting. Otherwise, you might think, this is just as another concept. Okay. So then to connect this reporting, thinking, value creation, or everything together, this integrated reporting was there. All right. So before coming into the history, or like we don't have a much long history in this integrated reporting. The concept evolved around 2010, right? 2009 in South Africa. So I'll tell you the story in a while. We'll discuss this one. I'm sorry, students. I will read the things inside this wheel for you to identify. So this is the evolution of integrated reporting. All right. So first, let me read, or let me help you if the slide is not clear. First, this is the evolution. That means without reading anything, right? So this is a time factor. See, don't try to read anything. Focus on the number of wheels, right? If this is given for a child, we can understand, okay, sizes of the wheels are different. There are different colors, and the number of wheels in a particular time period is also different. So that is what somebody can get. Do you agree with me? So just have that focus with you. Earlier, targeting, everybody was focusing on the wheel called financial statements in the 1960s. Okay. Right. I'm referring to this area, 1960s, and we are moving towards here. So earlier, only one thing that whole profession, right, whole business organization was focused on, that is financial statements, right? And see the size of the wheel, okay? And see the color also, right? See, everything has changed with this integrated reporting. And then when it comes to this 1980, because this is not just an illustration with number of wheels. And see, when it comes to this 1980 period, the size of this wheel has been increased. That means the focus and everything for these financial aspects were increased, right? But surrounding that financial statements, people were also wanted to, stuff like management commentary, governance and remuneration, environmental reporting. There was no any concept called sustainability during this time, but people wanted to concern about the environment. Okay, so then when moving from 60 to 80, so things have changed. Still, this financial statement area was dominating. See, the color is dark, and the size of the whale is big, large. So that was the structure. Okay, and see, these wheels were separated from each other. Financial statements were there, management commentary was somewhere, right, in the report, governance is somewhere, environmental reporting was there. And when it comes to 2000, see what has happened to the size of the financial statement wheel. Still, it was dominating in the reporting area, and management commentary part was still there, but the focus and everything was increased, right? Because how? In 1980s, people wanted to talk about the management commentary and how they achieved this. So comparatively, in annual reports, say compared to the last year, and then when we reach to this year, what has changed, what they have done, how they have done, were they successful? So management, with maybe indicators or whatever, with the chairman or CFO, with the industry analysis or whatever, then people coming up with different commentaries, right? So then that area, number of areas were large. See, the wheel size was expanded, but not connected, right? And then governance and remuneration, still the same wheel people wanted to discuss and include in the annual reports, okay? But it was not connected with the financial statements. Just as a practice, they did this governance, or maybe as a mandatory rule, they did governance. And instead of environmental reporting that was prevailing in 1980s, When it comes to this 2000, the concept slowly changed into sustainability reporting from environmental reporting. You got the change, right? See, this is in green, governance in, some color, and what is this, gray, and management commentary in blue. Okay, right. So the same, almost the same during this 20 years time. And now see, from this 2000 to 2020, right? Now we are in 2023, right? So what has happened? Okay, what has happened? Financial statements, where's financial statements now? It is not dominating. Financial statements were here, right? See the number of the wheels as well as the size of the wheel, right? Same. Financial statements was similar to the governance and the size similar to the management and sustainable reporting, everything. And everything is connected to a concept called integrated reporting. That is why, as the concept I told you in the very beginning, rather just plugging these additional things into this main corporate reporting thing, but integrated reporting, they have just integrated, right? So we'll see how. We'll see how. You might be still having the question on your mind. So then see the color of the wheels. Different colors were there, not connected, but here the same sense, same color to denote all the aspects being included in the annual report. All right. So everything is connected to something called integrated reporting. So that is the basic idea that you can get from this illustration, how these corporate reporting practices were changed, have changed, changing throughout the time period. Practices in the sense corporate reporting concepts, principles, and acts, standards, everything has changed throughout this period, right? And now from 2020 onwards, so say we are on a concept called integrated reporting. Okay. Who is Deloitte student?
The Big Four.
Yeah, that comes under Big Four. Like PwC, KPMG, EY, and Deloitte. Big Four in the sense, for others, if you are not coming from this accounting thing, Big Four auditing companies, we call them Big Four accounting companies, right? So Deloitte, I'll show you a small video clip if we have time today. Right. The reporting requirements have been added and changed through a set of laws, regulations, standards, codes, guidelines, and stock market listing requirements. Okay, all throughout this thing. That is what that is what what has caused for this reporting practice to change. Okay, and this is traditional corporate reporting versus integrated reporting. This is a main area for you to think. Okay. Now, can you tell me, okay, what type of things, you can see, you can obviously see the things have changed. Okay. Do you agree? These corporate reporting practices have changed. Now, can you tell me, and it's not in a slide, right? Okay, students, but we are having all these programs and everything, not, targeting, only the examination. We want every one of you to get something as the practitioners, because you represent the practice, and take this and then bring the practical sense also here. And everything that we discussed was not in the slides, right? This is not, like in our O-level, A-level, we can't be surviving only with the slide set and everything. We need to bring different materials and different discussions and different debates into our, discussion. So that's what we're trying to do. And what my question was, obviously, just a moment. Still on a rainy day, it's sweating. So you can see this change. Okay. Now, can you tell me what could have caused these reporting practices to change along with this time, say from 60 to 2020, and say this is we are now here today, right? Say 20 years now, so this is 2040, we'll say, right? What factors might have caused these reporting practices to change like this? I want you all to think a bit and come up with a list of factors that is not there in our slides. As learning partners, as learning students, we don't have something, but that is important, right? If and let me add a slide for you to write down, otherwise you will never think seriously. Yes, my there's a question like this: what has caused these reporting practices to change over time? Yes.
The
Now
main
you
reason
have-
was the main reason I think the fraudulent activities that were carried out by some companies like Enron and all that.
Okay. This is
As a
Niraj,
result,
right?
yes, as a result, like Arthur Anderson had to close down their business. Yeah.
Yes, very good. One reason could be this fraudulent, activities, right? Then when these corporates were, started failing and, these scandals are happening, then from the auditors, who is chargeable? Whether the auditor, whether the CFO, whether the management, whether the internal management people. So we don't know. So then all these things are happening because of a reason, no student. Because have you heard of this agency theory, right? I'm connecting my thing for the Niraj's answer. One aspect is the fraudulent activities or the misconduct or the management things, right? We have a concept in this reporting, right? Fraudulent financial reporting, FFR, right? Yes, as he correctly mentioned, this FFR, fraudulent financial regulation, right? So then fraudulent financial reporting, sorry, not regulation, I'm sorry, fraudulent financial reporting practices. We have this FFR practices, this earnings management, and so many things are there, right? So the problem is why? Where's the root problem? What is the root cause? The agency theory. And we always, think, can you remember? I don't know whether I told you. We always tend to say, okay, theory is something else, practice something else. No, right? So we are on a particular theoretical ground, right? And universities are not there to teach these theories. No, right? Practice is based on a particular, perception, particular thing in the, as a norm or something. That can be a theory, right? So business organizations, the root for this problem is the agency theory. Agency theory, it simply says you know, do you know the entity concept? I think you know the entity concept. Organization is different from the owners, right? because we are not going with this proprietary concept where the owner and the organization is being considered as the same. No, all right. Entity concept, owner was separated, organization was separated. And from the time these two things were separated and considered two entities, right? Not two entities. Entity, business organization is something, and owners as a stakeholder. And from that time, you need somebody to run the organization, right? That means this, who is this third party, who is this the other company, that is the agent, right? So the principal is the shareholders or the owners, and they have, they have their money in this business. Then they hire this a person called agent as the management board or the managers to run the company. So these management category as agents come into the practice and they run the organization for somebody else's wishes. You got the point? That is the normal thing, right? People call it agency theory, right? Because this is my money, I have invested, and I have no control as the owner in my business because I'm being separated. I'm a stakeholder and I can influence, I have power, but organization is different. And I need somebody, trustworthy person as the represent the management board to run the business where my money is there. Then definitely as humans, as things, there can be this conflict of interests, right? And different desires, different personal goals, different goal confliction, interest confliction, and everything. So then people tend to do get away from this legal ethical setup and do things, right? So this is why this fraudulent financial reporting has, as a thing, has been included or embedded into this reporting practice or reporting concept importantly. You got my point. Fraudulent financial reporting. So just as Niraj said, first, not the number one reason, we won't be able to prioritize the reason, right? One reason can be fraudulent activities. And in Sri Lanka also we have many examples, starting from Pramuka and this so many things, and ETI, right? And this WorldCom, Enron, and Darth Anderson case, and Satyam Computers. So many things we have, worldwide examples, right? So we don't know. The time allows us to study on this FFR, fraudulent financial reporting practices, in this reporting thing. We'll see. Yes, one reason done. Anybody else? See, for that reason, I have given you kind of a what do you call that? A background story to that fraudulent thing, how it connects with this reporting, why that has, this agency problem, agency cost is a major concern for the organization, right? Because this agency theory, we have to face this agency problem. Whatever a fraudulent thing happens, because it's connected, it's being rooted in this agency problem or agency theory. Okay, one is done, and the other one, I'm not giving you the list. It's your responsibility. If you want, you can write down. Okay. Right. Yes. Anybody else? Students, at what time your next session starts? Sharp at 8 online? What's your
8.
8?
8, yeah.
Okay, then you don't have a gap between this session and the next one, no?
No gap.
Okay, so we'll 40. Just we will discuss, okay, and few more reasons, and then we'll wind off, and we'll take this list to the next day, and we'll start from this point onwards. But we'll take some few more reasons. I don't want to give you all a pressure, to discuss till until this until 8 a.m. and then you have no break. So then when do you all take the breakfast and everything? Any gap between the next one and the other one? Nah?
No gaps. Not until 12.
Not until 12.
Yeah.
Okay, then meanwhile, somebody should be serving you, know, with everything, water and food and everything. Okay, so your partners and your people at home also should be very busy on these Saturdays and Sundays, no? Okay, right. We do understand that concern as well. So that's why I will finish within 4 to 5 minutes and giving you all a break to get yourself prepared for the next one. Yes, අපි තව දෙක තුනක් points ගමු. Then we'll take the whole list again next week and then we'll connect to this discussion. Okay. Fraudulent activities, yes, can be a reason for these different reporting practices to evolve over time.
What about technological advancements, like for
Yes,
example,
Yes,
ERP and things like that?
very good. Yes, very good. Yes, thank you for that. Technological advancements, because earlier we didn't have this technological support, right? Say from some time back, we are on these technological support systems and ERPs, and now we have so many stuff in accounting as well, isn't it? This cloud computing or ERP or this computer-based accounting systems and
Big data.
yeah, big data, very good, big data analytics and business intelligence. There's so many things, right? This because reporting changes, this Bitcoin and everything, it changes. So then we need to change accordingly, right? Otherwise we won't be able to survive. So technological impact, you can bring so many examples. Yes, good, thank you. 2 reasons done. Anything else? I'm writing the reasons, otherwise by next week I will forget. Any other reason? And we are taking a lot of time to discuss these things. Rather, my aim is not to complete the slide set within the given, by fitting with the given time frame. No, I just want to give something for you to take home, right? As a, to carry with you at the end of the session. So that is why we are linking to different discussions and everything. Right? Don't worry about the coverage and the number of lessons and slides and everything. Just ignore. Take something. Anything else? There are so many things. Anything else? Please add me also. Who is this? Okay. Are we having Johan today?
No, tomorrow.
Okay, right. So this group, are we having a coordinator? No, he coordinates 2 batches. Is it?
Yeah, there's only one group for the program.
Oh, all right, okay. So number 54, please contact Johan in Sunday's batch. Okay, number 54. Right, then please ask him to add you also to the group. Okay. Then you will be able to get the slides and everything. Yeah, sure. Anybody else? So I mean, not anybody else. Anything else? Any reason? No reason? There are so many reasons, students. So I will save this, okay, and let me upload the handout again to the chat. Please use this one, and then I want you to have a list. Okay, please try to have, not list in the sense you may not be able to find out 10, 12, 20 reasons, right? Because every reason might be connecting to the other, so then maybe ending up with a short list. That's okay. I want you all to think about some factors or reasons, for these reporting scenarios to change over time, and come with fewer things, right? Is that okay for next week?
Yes.
Okay, so just wait for a minute till I upload this. Okay, students, it's uploaded. No change in the previous slide set, except for one slide being added. Otherwise, you will not, some of you all may not get this, very seriously. So, okay. So anything else that you want to add, or any issues, any clarification, any problem? Any problem? Any issues? Was the discussion okay? And the slide is uploaded, not the slide, PPT is uploaded with the new slide. Please use that and then try to add something. No questions, nothing? Silent. Okay, then allowing you to, have a break. So I will wind up the session for today. We'll meet you next week. Thank you for your participation.
Thank you, madam.
Thank you.
Thank you.
Thank you, madam.